Hello, everyone. Hi, thanks for joining us on Your Overseas Home. Today we have a webinar. My name is Roseanne Bradley. I'm Senior Writer at Your Overseas Home and Property Guides. Today we'll be chatting with Malcolm McDowell from Chase Buchanan about your financial considerations you should think about when moving to Greece. It's great to have you all with us, whether you're live or catching up with us on demand. As we only have 30 minutes, we'll get on straight away. If you have a question, we will be taking questions just at the end. You can ask them in the bottom right-hand corner. There's a little questions tab. If you do need a reminder of anything discussed today or want to share this with any family and friends, you will be available to, a replay will be available in a few days on the Your Overseas Home website. So to get started, Malcolm, it'd be great if you could please start by giving us a quick summary as to who you are and how Chase Buchanan can help our viewers today.
Okay, yes. So if we could just move over onto the, onto there, that's fine. Okay, so I think I'll just start by just going through the presentation because I cover all that kind of stuff there. So my background is very much dealing with people who are already expats or are about to become expats. So I'm a MiFID regulated private wealth manager. But I think the point I want to make here, I don't want to spend too much time on this bit, is I've lived in 7 different countries now, and done several stints in some of them in some cases. 21 years of doing this. I live back in the UK now, but most of my professional life has been overseas. So everything that you're thinking about, you're about to go through or already going through, been there, done that, got the t-shirt, thrown it away. So I'm definitely the right person to speak to about this sort of thing. But at the end of the day, all these things are very much bespoke. And I just help people with regard to understanding the opportunities and pitfalls when they are moving offshore. So that's enough about me. Let's get on to the interesting stuff. Okay. Right, okay, so what I'm going to cover here is a very much high-level view of Greek tax. So I won't be able to cover everything today, but I will be able to cover the basics of how it works, and you will have a very good understanding of what to look forward to once you get to France from a financial point of view. So I'm going to cover that in little parts. First, I'm going to deal with sort of income taxes, those sorts of related things. Then I'm going to move on to investments and finally get on to pensions. Okay. So the first thing to look at is the income tax scale for the sliding scale for income tax within Greece in 2023. Okay. First thing to point out here is you are in fact taxed from 0 to 10,000. Okay, it's not like in the UK where you can go up to 12,000 sterling without being taxed. Okay, so it's important to realize that the Greeks do tax low-income people, although it's not very high. That's something to bear in mind. Okay, so the tax bandings, they're all there for you to see. So anything up to 10,000 is 9%. Anything between 10 and 20 is 22%, and 20 and 30 is 28%, and so on. So all pretty straightforward. But there are some other taxes as well that we need to speak about. And then what I'll do is I'll give you an example of how that works in terms of your income. Okay. So next. Okay, sliding scale for rental income. So rental incomes in Greece are treated differently to normal income. So if you've got properties, it doesn't matter where they are, whether in the UK or somewhere else in the world, and you're getting income from those properties through rent, while you're tax resident in Greece, then you'll be subject to this tax as well. Okay, so just take a look at this. It will be instead of, so any kind of rental income will be subject to this banding. So up to 12,000, 15%. Anything between 12,000 and 35,000 euros, 35%, and anything upwards of 35,000 is taxed at 45%. Okay. Right, moving on to the next one. Okay, so this is the solidarity contribution that applies to total income in 2023. Okay, so this is another tax on income, and I'll give you an example of how all three of them work together in a moment. So up to 12,000, 0%, thankfully. Between 12,000 euros and 20,000, 2.2. Between 20 and 30, 5%. And on the sliding scale upwards from there. Anything upwards of 220,000, you're looking at 10% tax on that. Okay. All right, that sounds all a little bit confusing. How does that work together? So let's do an example so you can understand how that all works. So let's say a Greek taxpayer, you've moved to Greece, you're earning 40,000 euros, 25,000 of those euros are from work, 15,000 are from renting out an apartment. How does that work? Well, you're going to be subject to your income, to your employment income, rental income tax, and your solidarity contribution. Okay, so for employment income, that individual will pay 9% up to 10,000 and 22% of another 10,000 and then 28% of the 5,000. Remember the tax bandings that we spoke about a little bit earlier, and that will make that'll be a tax of 4,500 euros. For the rental income, that will be based on the 15,000 that you bring in from rental income. You will pay, again, according to the bandings I just showed you, 15% on up to 12,000, then 35%, and then that all basically makes up to 2,850 euros. Okay, then you've got the solidarity contribution. So on 40,000, they'll be paying 6.5% or 2,600. Okay, so with an income of 40,000, you'll be paying just shy of 10,000 euros in tax. Again, that's how that works. Now, of course, each individual will be different. Some of you will have rental income, some of you won't. But that's something to bear in mind. So you can strike off the rental income, obviously, if you're not renting any properties. But that's a good example of how that works and the different bandings for each type of income tax. Okay. Okay, property taxes. Let's cover this. Nothing to worry about significantly. When you buy a property in Greece, you're looking at a real estate transfer tax. It's just over 3% of the property value. Then you annually pay a uniform tax and the ownership on the ownership of the real estate property and a municipal tax. Okay, so the best way to think of those two taxes is a little bit like council tax in the UK. Okay, so but it's one is very easy to calculate. The other one, it's a little bit different, a little bit more complicated and very bespoke, depending on what kind of property you've purchased. So the municipal tax is levied at 0.025 to 0.35% of the real estate's value, depending on the property location, age, and that's included in the utility bills as well. And the uniform tax depends on the value of the property, but also on its location, its surface, its zone, its price. And so it's all calculated individually, a little bit like what we have in the UK. So that's one thing to bear in mind in terms of purchasing properties in the UK, in Greece. Other taxes. Okay, so we've got a number of other taxes in Greece that we need to just briefly cover. Some will apply to you, some might not. It just depends on your circumstances. So capital gains tax in Greece is 15%. Withholding tax on dividends. So if you're getting dividends and from your share portfolio, your equity portfolio, that's at 5%. Withholding tax on interest is 15%, and withholding tax on royalties is 20%. Okay, those are all relatively low if you compare them to other European countries. Okay, so I would say that the income tax, not as attractive as some people might think, but the tax on capital gains much lower than most countries. Tax on dividends dividends much lower than most countries, so very attractive from that point of view. Moving swiftly on to the next page. Okay, pensions. We just spend a little bit of time on this because this is very important. Okay, because most of the people I find who are moving to Greece are in this kind of category. They're thinking of retiring there. They're either already drawing pensions or they're going to draw a pension once they get to Greece. So first of all, let's cover the tax on your pension when you move to Greece. So this is great news for people who, because this happened relatively recently, since 2020. So the Greeks were the Greek government wanted to attract pensioners to Greece. And the way they did that is they said, well, we're going to have a different income tax for pensioners who move here. Okay. And that is, so forget the income tax now. That now is taken over by this, the foreign pensioners regime. It's an alternative tax regime for retirees in Greece. And there's a flat rate of 7%, and it replaces the income tax. Okay, so instead of paying your normal income tax bandings, you'll be paying this 7%, and that carries on for 15 years. Okay, once the 15 years is over, then you go into the normal tax bandings. Okay, that's obviously very attractive. Okay, for people who don't want to pay lots of income tax in the UK on their pensions. Okay. And then the other thing we need to talk about is pensions that are not in drawdown yet. So let's say you move to Greece and you have a number of pensions, be they state, defined contribution, or final salary, and you move over to Greece, then it is, like it says on the presentation, it is very bespoke, but there's a couple of things I just need to cover because you will be becoming an overseas tax resident. So there's a couple of things we need to talk about. So long story short, you have a situation where back in 2004, when we were members of the European Union, back here in the UK, what happened was you had the European Tax Directive. And basically what that was is the freedom of movement of people, all to do with the freedom of people and freedom of movement of capital. Okay, and that included pensions. Okay, so obviously, a directive is not law, but it's pressure on the individual states for this to become law. And in 2006, you have what's called Pensions A Day in the UK, Pensions A Day. All this stuff is in Google if you type it in. And from that day onwards, HMRC basically made it their legislation. They took on that directive, and anyone who had left the UK and had a pension there had the right to take their pension with them. And the reason why the European Union did this directive and put pressure on the individual states to put it into law was just out of fairness. Really, they realized that the world has changed. People weren't working for British Gas for 40 years and then retiring. People were doing 2 years here, 5 years here, 10 years here, and they were doing it in different countries. So all the European Union was saying was, look, if you've got a pension in the UK and you're no longer living there, why are you paying tax on it in the UK? You should be able to bring it with you and pay tax on it in the country where you're resident. That money should be portable. Yeah, and it was just, they just realized that people weren't staying in one place and moving around. So that's why they changed the law, just to modernize things because things had changed. So that's how all this came about. What they didn't anticipate in any way, shape, or form was that this would turn into a massive, just mushroom into a massive industry where IFAs, independent financial advisories, will be helping people moving their money out of the UK. So anyone who would become an expat will be moving their money out of the UK. And this just mushroomed. Okay, none of this is new news or fresh off the press. It's been going on since 2006. And what HMRC did not foresee was that they would be losing so much money in tax revenue because this money was moving overseas and they couldn't tax it directly. Okay. Now, since Brexit, obviously they have tried to make things more difficult, but you can still move your pension out of the UK once you become a non-UK tax resident. Okay. So really, at the end of the day, it depends on people's circumstances and so on. But the most important thing here to bear in mind is that just, if you've got a frozen pension that's in the UK, you're not adding to it, and you're overseas, talk to me. So we can look at the various options that you've got. And all the stuff that I've spoken about now is basically all sitting on the HMRC website. You'll see it there. Just pop onto there. Just type into Google HMRC overseas pensions, and all this kind of stuff will come up. Okay, it is UK legislation. Why not take advantage of it? Okay, so, and there are massive advantages to getting your pension out of the UK and getting it into Greece, into the European Union. Yeah, tax advantages, reducing your risk, all these sorts of things. Okay, so enough about that. But it's a very, very important topic. Okay, so high net worths. I'll touch on this because while the vast majority of my clients are not in this bracket, some of them are. So let's touch on that. Basically, if you're extreme high net worth and you're on this call, then there is an alternative way of paying tax in Greece, and you're not subject to those bandings. The alternative way is to basically for individuals to pay 100,000 per year. Obviously, you need to be on quite considerable income to do that, but you have the ability to do that once you turn up in Greece. In some cases, obviously, for some high net worths who are earning very, very lots of money every single year from different investments and so on, this makes perfect sense. So this is a lot more of a high net worth friendly kind of environment compared to, for example, I don't know, France, or perhaps even Germany. Yeah, those sorts of places where they really tax the rich. That doesn't really happen quite so much in Greece. Okay, but obviously you need to be earning quite a lot of money, £100,000 a year. Well beyond £100,000 a year to be able to pay £100,000 a year in tax. So, and that regime, just like the other one, stays for 15 years, just like the pension one. Okay. Right, inheritance tax. Let's touch on this. I can see we're already running out of time. Right, there's a double tax agreement between Greece and the UK, but it does not cover inheritance tax. So, if you've moved to Greece and you think you've got away from His Majesty's Revenue and Customs, that is not the case. Okay, you will be deemed as a UK domicile. Domicility is much harder to kick than tax residency. Okay, and when you pass away and your partner passes away, then you will be subject to inheritance tax in the UK. Make no mistake about it, it's painful. Okay, however, there are very simple ways of dealing with it. You just can't do it on your deathbed. Okay, you need to speak to someone like myself, and we can set up a structure so that it's easily mitigated. Okay, at the end of the day, inheritance tax is a tax that you pay if you like the inland revenue more than you like your kids. It's completely unnecessary. Please don't do it, but talk to someone like me first. Okay, so it's not, like I said, it's not something you can do on your deathbed, but once you move to France, you can, move to Greece. Sorry, I just did a presentation on France. Once you move to Greece, please, talk to me and we can get that arranged for what you need to do. Because at the end of the day, the nil rate band in the UK, it varies between 325,000 and 1 million. And anything over that, which you then pass on to your children, will be taxed at 40%. Okay, so if you're talking about passing on 2 or 3 million, which a lot of people will be, that starts getting a little bit disgusting. Okay, and there's no need to do that, right? So, and finally, again, if you're in that situation, please talk to me. If you want to mitigate your inheritance tax, get in touch. And then the other thing, that's it really. Got any questions? Just ask. Put them in the question box. We all have to pay tax. That's a given, but there's no need to leave a tip. All right. So just come to me if you've got any kind of questions about that. Be that inheritance tax, be that lump sum investments that you're worried about are going to be taxed for capital gains, all that sort of thing. come to me and I can get those taxes mitigated, either partially or entirely. And I've been going on for far too long now, so over to Roseanne to tell me what the questions are.
Thanks, Malcolm. Really great stuff there. I have a few generic questions, which will hopefully apply to a lot of people. So we'll start off with those. Do you know if we have to pay tax if you bring your car to Greece?
Right. Okay. Yeah. Let's deal with that. So it depends how old the car is. So if you've got a car, or whether it's even a camper van or caravan, whatever it is, as long as it's got wheels, you don't have to pay any tax if you take it to Greece, as long as the car is more than 6 months old. Okay. If the car or vehicle is less than 6 months old, then you're looking at paying some tax on that. Okay. What they're obviously trying to stop is unnecessary movement of vehicles and these sorts of things. So the tax is based on that 6 months. Just make sure that whatever it is you bring over is more than 6 months old.
Okay, great. And at what point do you become a Greek tax resident? Do you have to apply for that?
Sorry, I didn't catch that question. Can you say?
Sorry, can you hear me now?
Yeah, I can hear you. Yeah.
At what point do you become a Greek tax resident?
Right, sorry, you cut out at the beginning. Yes, so it's 183 days. Once you've spent 183 days in Greece, they will deem you as a Greek tax resident. Clear as day. So when you come to residency, it's clear as day. When it comes to domicility, it's all smoke and mirrors. And the reason for that is His Majesty Revenue and Customs are very keen on going after people once they're dead and going after their money. So they do it. So all smoke and mirrors, all that kind of stuff. But residency is clear as day, black and white, 183 days. And that's it. You're a tax resident in Greece.
Fab. And for someone who's looking to retire to Greece, would you advise they take the 25% lump sum from the UK pension before they move to Greece?
Yes, because the 25% tax-free lump sum may not be tax-free when you turn up in Greece. Okay, so it might be an idea to therefore take out that 25% and then transfer the rest into an overseas pension. Okay, it depends on what type of pension you've got. But again, talk to me. But 9 times out of 10, although it's seen as tax-free in the UK, a lot of these European countries don't treat it as tax-free. They want to come after that as a big lump sum. You're not a member of the European Union anymore, so we're going to come after that money. It is being challenged in the courts, but I don't see any progress on that, and I haven't heard anything that has gone the other way just yet. So I don't think that's going to change. So take out your 25% lump sum while you're in the UK, and then transfer it out of the UK once you are a resident in Greece.
Okay, thanks. I've got one now. Would I be able to set up a company in Greece and put my UK properties into it to mitigate the Greek rental income tax?
Okay, nice try, but no cigar. Okay, so they won't allow you to do that. Oh, that's such an obvious way of trying to, I'd say avoid the tax as opposed to mitigate it. I help people mitigate the tax. I do not help people either avoid or evade the tax. Tax evasion, tax avoidance, I don't help with. Okay, so another thing that people do is get their companies registered in overseas companies. Okay, and you can just have to look at what's happened in the news recently to see that that's not a very secure way of doing things either. Okay, we are now moving into a world where there's a thing called common reporting standards. This was an idea stolen from the Americans, the FATCA, or the whole FATCA thing, where it's not the actual individual who gets into trouble if they don't declare their money, it's the company. It's i.e. the bank who's holding the money. So there's all this reporting going on. If you've got money that's come in overseas, it's just a matter of time before the Greek authorities know about it, because they're all reporting to each other and talking to each other now. So the days of tax havens are slowly coming to an end. That doesn't stop a lot of people from still trying it, but it's not something I would advise. There's much easier ways and legal ways of mitigating your tax. You don't have to go down that road. It's unnecessary.
Mm-hmm. Okay. I've got a question just on the similar kind of topic from Tom. He's asked, if a rental is in another country, a rental property, sorry, and the income's taxed there, will it be double taxed in Greece when you're a resident?
No, it will not, because there's a double tax. But the thing is once you become a tax resident in Greece, your rental income overseas, once you've done those 183 days, you will have to declare your properties overseas, just like you declare everything. And then that money you will then be taxed in Greece on that money. Okay, so once you can't just pay it in the UK and then not expect to pay it in Greece. Okay, so the best thing to do is just to make sure that you declare everything. You turn up in Greece, you declare what incomes you're getting, be that from work or be that from rentals, and then you pay the tax in Greece for that. Because again, you'll get into trouble if you try and do it the other way.
Okay. I've got a question from an American. Does the 7% apply only to pensions or US Social Security number, or does it include investments for foreign retirees?
No, it's just for pensions. Investments will be seen differently. Okay, it's just for pension. It's just for your pension income.
Okay. Another pension question. Amanda has a teacher's pension, which has already been taxed at source. Will she still have to pay tax again in Greece?
Okay. So if you're already in drawdown, so I should have covered this earlier. Very good question. So the way that will work is very simple. You arrive in Greece, you tell them I've got a pension that's already in drawdown, and they will give you a piece of paper that you need to fill in, a small application. They will then, the Greek tax authorities will then stamp it. It will then go back to His Majesty's Revenue and Customs. They will stamp it, and then it will go to your administrators of your teacher's pension. And then what will happen is that money will then be paid gross, and the tax will be paid in Greece, not paid in the UK. So you won't see UK tax coming off it. You'll see Greek tax coming off it. But you just need to go to the Greek tax authorities and tell them, look, I've got this teacher's pension, and I want to pay Greek tax on it. And they will give you that form, and you just have to pass it through to Majesty's Revenue and Customs, and then onto your administrators in the UK.
Okay, fab, thank you. Our next question is it correct that transferring property in Greece is now pretty much impossible in case the documentation for the real estate is not in good order?
Yes, you need to make sure your documentation is good order. When you say transfer, I'm assuming you meaning, your document, that is correct. It is a difficult kind of there's a lot of red tape in Greece. Yeah, that's one of the problems, and it is changing all the time. So yes, that is a bit of a problem in Greece. Absolutely, you're absolutely correct. Yes.
Mm-hmm. Okay, fab. I have a question from Stephen. Are civil service pensions transferable? He says that he has 2 other pensions.
Civil service pensions are not transferable. Very good question.
Okay.
And I'll tell you what else is not transferable either. So the UK government jumped in around sort of 2015 when they saw all this money flying out of the UK, and they stopped police pensions, army pensions, civil service pensions, NHS pensions. Okay, you can't transfer those, but you can transfer, and then you can't transfer any state pension, but you can transfer any private pension that's a defined contribution, and you can transfer any private pension that's a defined benefit.
Okay. All right. Let me just grab another question. They were quite short on time. The 15-year tax period mentioned, is that from the time an individual moves to Greece or from a date already set by the Greek government?
No, that's once you do the 183 days.
Okay, so
Until then, you're visiting.
Yeah. What are the options for moving to Greece? Golden visa sounds interesting, but what if I get a property less than 250,000 without a job?
Right. Okay. So in terms of visas, that's changing all the time. So I don't advise on the visa side of things. That's not my remit. So I'll be brutally honest with you. I help people become financially compliant and reduce their taxes and reduce their risk and all these sorts of things. Help them with their investments. But in terms of visas, you will need to speak to a visa specialist because I deal with tax with all sorts of different countries. The visas situation in all the different countries has changed so much in the last 2 years since Brexit happened. It's impossible for me to keep up with that. So I can certainly point you in the right direction if you're still struggling to find someone online who can give you that information.
And then one more question is, what is the corporate income tax for Greece?
22%. Okay, so not that much different to the UK. But if you're going to be setting up a company in Greece and doing some business, and the Greeks will love you for that, 22%. Corporate tax.
Lovely.
Not so bad.
Okay. Sorry, my computer's being quite slow right now. I think that's probably all we have time for just now. Before we finish off, sorry, I want to thank Malcolm for all his tips and advice. We strongly recommend that you get in touch with Chase Buchanan to directly discuss your requirements in detail. Before we finish, I would like to invite you all to register for our virtual event. I've just shared the link just now. It's on the 25th of March. It's a day where you can gather all the information that you need to make key contacts to help you on your journey to property hunting. We'll have experts just like Chase Buchanan there, as well as real estate agents, experts in finance, basically everyone who you need to talk to get overseas to Greece safely and securely. So I'll leave that on the screen until we're finished. Thanks to all our viewers for watching this session. We wish you all the best in your move overseas. We do have other resources available to you to help with your buying journey, including guides and other webinars. So just take a look on your Overseas Home website. Thanks again, and thank you to Malcolm. I wish you all the best. Thank you. Have a good evening, Malcolm. Bye.
Bye-bye.